Boop boop bop ba dum bum. Boop boop bop ba dum ba da dum da dum da dum ba dum bum. Beep bop boop bop boop 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 da ba dum bum. Beep bop boop bop boop 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 ba dum bum. Hello, folks. Thanks for visiting us at reasonandbalance.com. I'm David Lentz. Well, it's Martin Luther King Day on, what was it, January, whatever this is, the 15th, 2018, and we're sort of all taking a bad weather day here. It's 17 degrees outside. My car is being worked on. So I thought I'd take a few minutes and chat and offer a few words of wisdom. But let's talk about the stock market. First of all, I think it needs to be pointed out that the stock market had been doing pretty well under the prior administration. The Trump administration came in and set to work on trying to deregulate things, and I think that basically the market trends were already there, that the economic pieces were already there for the market to do well. I think Trump does deserve some credit for putting the market, instilling in the market the expectancy that earnings may go up simply because of deregulation. And also interest rates, surprisingly to me, have remained relatively slow. Now, as we've discussed in some of our other videos, stock market values are based on what the market expects in the future that the earnings of companies will be, their projections. Basically, the market's expectancy of what will happen in the future. And we basically said that it was tough to outguess what the stock market was going to do, that it's probably not a good idea to try to be too much of a stock picker, to invest in the long term, and to be diversified. But having said that, the formulas that we illustrated on the board showed that sort of pretty much you can sort of almost look at the situation as like having a numerator and a denominator. In the numerator is expected future earnings based on projections, educated guesses of the future. The denominator consists of something that pretty closely equivalent to an interest rate, which is basically a discount rate. That discount rate is tied to market, for lack of a better expression, market interest rates, okay? Now, what Trump has probably been successful in doing is instilling in the market an expectancy that because of deregulation, that future earnings will be better than they were before. In the denominator, the market must think that the 5% unemployment benchmark, which we talked a lot about, which is the number that the Fed has always, I think, sort of traditionally used to basically say, hey, if you're at 5% unemployment, that is in fact full employment for reasons we discussed in the video, and that we'd better tighten up on the money supply because inflation is going to kick in if we don't. If the Fed did act that way, which would be the way they would traditionally act, that would push up interest rates. That would push up the denominator, which would have the tendency to decrease stock values. So the only way that basically stock values can go up in a situation where you have increasing interest rates or an expectancy of increasing interest rates is if projected future earnings are going to increase faster than projected increases in interest rates. That's tough to do. That's very tough to do. Very tough. So what I'm left with is a couple of thoughts. Number one, that the 4.1% or whatever they're talking about right now is not an accurate figure of what the true unemployment rate is, that there's more unemployment than that, and that there's more, quote, slack in the market, in the labor market, than what the statistics indicate. There's more people out there that are unemployed or that are underemployed than those statistics would indicate. And therefore the Fed is not going to act to increase interest rates as soon as they otherwise might. So that's because, so the fear of future increases in interest rates isn't there. Instead, what the market is doing is saying, hey, Trump's in there, the Republicans are going to decrease regulation, it's going to increase earnings in the future. Therefore, hey, these companies look good, let's buy stocks. That increases the value of the market. Now, as we've also discussed in some of our other videos, and as I discussed in my novel Rouse Solution, there is an increasing wage gap and wealth gap in this country. The fact that the market is doing well doesn't necessarily mean that the average guy in the street who does not invest in the market, probably because he can't afford to, that doesn't mean that they're getting any better off. This is a typical situation where the rich get richer because it's only the people who can afford to buy stocks that are getting richer, not the guy on the street. The people who, people that probably, they may work at Walmart, fast food, people that have in restaurant, typical mom and pop restaurants, you name it, the average person on the street. So a lot remains to be done there. Also, given the recent changes to the tax code, which finally the Republicans were able to get through, also increases the future earnings expectancies of companies because of favorable tax treatment. That's a biggie too. And the repatriation of earnings, foreign earnings, a lot of money has been held overseas. We're going to have to, the market expects those earnings to be repatriated, which should be a boost to the economy. And it remains to be seen whether they do that. Probably will. But it remains to be seen whether they will do that. But that's another factor. So anyway, so that's the one thing to be a little bit worried about is, well, two things. Let me just say this. Number one, those tax cuts really only favorably affect companies, not so much average Joe on the street. And to the extent they do those and to the extent that the tax cuts enacted recently by the Trump administration and the Republican Congress, to the extent that they do favorably affect the average guy on the street, there's a great fear out there that many of those tax benefits are only temporary, and that slowly but surely the guy on the street is going to start feeling the pinch 1 or 2 or 3 years from now, because those tax benefits or tax cuts are going to be taken off the books because they have what are known as sunset provisions. So in any event, when that starts to happen, all of a sudden the spending in the economy may start to go down. Also, and I think that 2 other major points along those lines, a lot of these deregulatory things may have adverse environmental impacts. And it remains to be seen whether there's going to be some extreme kickback on that once all of a sudden the general public begins to realize that there are significant adverse environmental impacts going on. It's easy to not worry so much about that while we can all breathe and drink clean water. But if the situation starts to get sideways on that, and if there is a significant political revolt by the general public just, some of the more questionable aspects of the Trump administration, and you get as sizable Democratic majorities come in the midterm elections here in which should be starting here in the next 6 or 7 months, less than that probably. All of a sudden, a lot of these situations that have just been enacted, these laws, may get turned around and may be kind of short-lived. So, frankly, to me, the market looks very, very perilous right now, in a very precarious situation. And the run-up, look, a lot of this run-up in stock values occurred during the Obama administration, so we've had a recovery period. It's been slow, very slow, and a lot of people have become very, very impatient. I think that's one reason why Trump was elected, actually, that people just were, the direction's the right direction of the economy, but it's just not picking up fast enough. They became impatient. But we've had a long period here where we haven't had any real serious economic reversals. It hasn't always been rosy for all of us, but the economy at least has been going in the right direction for many years now, since basically the end of 2008, I guess. But things are looking like a bubble to me, to be honest with you. Speaking of bubbles, I don't really know a lot about Bitcoin, but it's such a hot topic. I guess I would feel almost remiss not to say something about it. Bitcoin has one thing going for it that I can see is that it keeps. It's something the government is not supposed to be able to trace inherently. Anybody that saw the Red Rouse solution knows that I'm very fearful of the powers of Big Brother government snooping into our lives. So great, in that respect, I think things like Bitcoin are a great thing. On the other hand, it does hurt all of us if the government can't tax the profits that are earned on Bitcoin transactions. Also, Bitcoin is probably used too much by criminal enterprises and renegade foreign governments, namely folks probably like North Korea, to circumvent sanctions to get them to reduce their nuclear development programs, nuclear weapons development programs, and by criminal enterprises to finance, criminal enterprises, none of which is good. That will probably provide significant incentive to governments to look into regulating things like Bitcoin, which I think would be absolutely would take a lot of the luster off of Bitcoin. And also, since it's supposed to be, quote, a cryptocurrency, I'm not sure what the effect is on the, quote, money supply. And I don't know how the central bankers and all that think, we got this medium of exchange out there. Does it affect the value of our currency? Do we take it into account in determining the money supply in terms of setting monetary policy and all these questions? To the extent these cryptocurrencies get more and more important, the governments are going to start to say, hey, and you can't use cryptocurrencies to pay your taxes. And it's not legal tender to pay debts. People are supposed to, by law, accept dollars in exchange for payments for goods and services and payments for debts. That's the definition of legal tender. And that raises a whole different important discussion. I frankly have a certain amount of fear of companies like Visa, for example. In this next section of the video, I sort of misspeak a little bit. I'm talking about, I think it's Visa, I'm not sure. But certain companies want to go basically to a cashless society and are actually lobbying and actually paying things like restaurants and certain business establishments. They're actually paying them not to accept good old American dollars, namely cash, to pay for goods and services. Instead, they want you to use cards, like an ATM card or some kind of card, and they will charge the vendor, the restaurant, or whoever to process their transactions. That's what I'm talking about. The firms that want to do away with good old cash and do everything by, computer bits and transactions with cards and things like that. And have everything like on a card and do everything by computer chips and all that kind of stuff. Because let me tell you something, that really hurts people that can't afford those cards. And just as importantly, not more importantly, but just as importantly to me, if we do away with currency altogether, it's going to, regular currency, I'm not talking about Bitcoin now, I'm talking about regular currency, it will in fact increase the ability of Big Brother government to track everything we do, and will make us even more subjected to Big Brother government. And so that's what I'll say about it. I'm very alarmed by these trends by Visa, etc., to reward companies that refuse to accept currency. Frankly, I'm very opposed to that, very opposed. But anyway, I sort of digress. So even though I sort of like on some level that Bitcoin would get, things like Bitcoin would get around something like that, I think the governments ultimately are going to step in to want to take a look at that, to have more of a say-so. Also, Bitcoin, you don't have a situation where they issue a prospectus or official statement describing to the investor what exactly it is, how its value gets ascertained. It really is just, the greater fool theory, which is I just think that people in the future are going to think that this is more and more value. Now, the fact that there's only a limited amount of Bitcoin that's going to be issued is something that would have a tendency to enhance its value. But here's the thing. If other people can issue, and I think this is one thing that's going to, another thing, besides I think governments will, one day take off some of the luster because they'll want to regulate it, that's one. But the other major thing is that if other folks, if you and I could develop our own cryptocurrency, and everybody can develop their own cryptocurrency, sooner or later it becomes sort of less and less unique, and it looks more and more like monopoly money, paper money. So I'm very concerned about a lot of folks getting involved in a real huge bubble that's going to burst on Bitcoin. I guess and let me just say this, Bitcoin, there is no way, there are no like I said, it's not a currency. You can't pay your taxes with it, so it's not really a currency. There's no explanation to the investor of what it is. It's not like a company. I mean, it's not like a currency, and it's not like a stock, and it's not like a stock because its value isn't based on some future earnings of a company or the entity that you're buying the Bitcoin from. It's just, I just think that some other guy is going to buy this at a higher price in the future. Why? Why? It's just because it's the thing to do. It's sort of like high school. It's just sort of like, it's like a fashion statement. It's like a piece of art. It's like you go out and you buy a Picasso because you think that somebody else, the next guy out there, is going to want to say at a cocktail party, well, I own a Picasso. My point is that it may be called a cryptocurrency, but it's not a currency. It's not a stock. It's not a traditional investment, for sure. Now, even though people like Goldman Sachs and institutional investors are beginning to set up trading desks for that, which does admittedly add legitimacy to things like Bitcoin, still, the fundamentals, to me, are not there. I can't see where the basis of the actual value of it is. So it's not even a store of value. It's like a pet rock. Bidding on a pet rock. I don't know if some of you are old enough to remember pet rocks as Christmas presents from about 40 years ago now. But so I worry for Bitcoin investors. In terms of dieting, since 1st of September, 4.5 months ago, I've lost 30 pounds. I did most of that actually in about 3 months. Working out 6 days a week, 1 day off, 3 days running, 3 miles each day, every other day. The other 3 days, the off days, I was at the gym doing weights for about 40 minutes. High protein and vegetables. Protein's the key because it fills you up. Grape tomatoes, egg McMuffins, egg delights, no fried food, no ice cream, no pizza, no red meat, no butter, no mayonnaise. Be smart about it. Don't drink your calories, and if you do, the reasonable amount of working out, you can't outwork a bad diet. You can't outwork a bad diet. So it really only takes moderate exercise. If you do too much exercise, you'll get so hungry, you'll overeat more than you're expending in the extra calories in the workout. So it's only moderate exercise. Just stick at it at a reasonable level. Keep your calorie intake, depending on whether you're male or female and how big you are, under 2,000 calories a day with that exercise program, and you ought to stay in a weight loss mode. I did allow myself during a 6-hour period on Sundays to eat whatever I wanted to eat, except fried foods. No fried foods, no bacon. But I allowed myself, ice cream, a reasonable amount of ice cream. If I wanted 2 or 3 dishes, I could have 2 or 3 dishes. Or if I wanted some brownies, I could have brownies, but only during a 6-hour period on Sunday. And so that worked. Just be a little bit smart about it. Make sure you get your rest. In any event, just to further elaborate on the diet aspect, naturally it's low carb during that period when you're on a diet. You don't want to be doing cakes and cookies and donuts and things of that nature. It's low carb, high protein, preferably white meats, turkey, chicken. Actually, some pork is okay, and fish, naturally fish. Just wanted to be clear about that. This is David Lentz with Reason and Balance. That's my thoughts and ideas for today. Be smart out there. Don't be a part of the lemming pack and walk over the cliff with every other fool out there. Be reasoned, be balanced, and join us again in the future at our website at reasonandbalance.com. Thanks a lot.